31st March 2017. So we started with what? Revenue. Our revenue, there was no change. Revenue was what? 1.1 shillings in thousand. So less the cost of sales. Cost of sales. So here there was a working number 1, cost of sales. So as per the trial balance, 823,000. And we add, so there are two things that you should note, specifically for the depreciation. Depreciation on building, if they are silent, it is an admin expense. Depreciation on plant, if they are silent, it is a cost of sales item. Others I gave them wakati watu waliweka kwa cost of sales because maybe you did not know. But now if they have not told you where to classify, building, put it as an administrative expense. Plant, you put it under the cost of sales. So here we start with the deep on plant. Our plant was valued at, and we are calculating depreciation based on what? Reducing balance. So the cost of plant was 189 with an accumulated of 49. 20% of that, 28,000. So when you add, it will give you 850, because they are the only one, that's the only item that you're supposed to include there. 851,000. Here, 851,000. Get 77,800. 77,800. Then we less the distribution. There is no change. Distribution costs. Our distribution was valued at 43,000. 43,000. And we less the finance. The finance cost. And you say this one is bank interest. Our bank interest was valued at 1,400. So get the profit before tax. Profit before tax. So when you minus, you get ngapi? 126, 800. We go to tax. Okay, note 3 for tax. You have been told in note number what? Note number 4. Our income tax provision 54,400. Then you have the deferred tax. Deferred tax carried forward. Deferred tax, you say, is a tax that will be paid in future as a result of the activities in the current year. Note 4, income tax provision was 54.4 and is required for the year. As of that date, deferred tax liability amounted to 18.8. Yeah, those one that took 18.8 and multiplied by that percent. This one was not a temporary difference. It was already a deferred tax. You pick it directly the way it is. So they brought forward, deferred tax brought forward in the trial balance. We had a value of what? Yeah, 12,400. So we had an increase of, and you minus 6,400. When you add, it will be 60,800. And we had over provision. Look at the trial balance, or note number 4, the last part. The balance of the current tax in the trial balance represents overstroke under provision of tax liability for the year ended that 1st March 2016. So we said if the current tax is on the credit, that is an under, and over provision, not under. Over provision, meaning last year the provision was high. We paid tax in the previous year and we remained with what? 2,400. That's why it's on the credit side. So this one will be used to offset the tax for the year. The tax for the period will be offset by this particular over provision. If it is an under provision, it will be on the debit. Yeah, the debit side. This one we shall add. Over provision, we less. Under provision, we minus. So over provision, we minus. So we have what? 2 what? 2 400. So you'll get what as your tax for that year? Yeah, if it's on the credit side, you minus. On the debit, you add. So when you minus 24, you'll get 6,800 minus 24, 58,400. So here, when you minus 58,400, profit for the year, $68,400. Then you have other comprehensive incomes. Other comprehensive incomes. So we deal with that. Revaluation of what? Was revalued at 70. In the trial balance we had what? 80. That is 120 minus 40. 80 with an accumulated of what? 40. Yeah, 40. You'll get a gain of 30. Net gain 14. Don't know why you did not get that. So this thing is unis. You minus even the 5,000. 5,000, remember, was the one that we depreciated here. It was for the one that was revalued. It was not this one. So this one we shall minus only on the revalued amount in the financial position. So revaluation gain on land and building of 14. So your total comprehensive incomes will give you a total of 82,400. That was the first part. The second part was for statement of changes in equity. Prepare it here. Statement of changes in equity. Changes in equity. So our equity comprises of, we have ordinary shares, followed by what? Share premium. Share premium, followed by retained earnings. We had revaluation, and it is only revaluation of PPE. Did you have general reserve? There is none, so they are the only one. Then we have the total. We started the balance, brought down. Ordinary we had a value of 100, share premium of 40, retained earnings of 22,400. It will be a total of 162,400. Then we add for the year. For the year, our retained is 68,400, and this one was 14. A total of 82,400. Then we paid the dividend. We paid a dividend of what? 40,000 under the retained. 40,000. Then there was a rights issue. Majority of you did not calculate that. Rights issue is not number 5. Yeah, number 5. So working number 5, rights issue. And you are told on 1st July, the company made rights issue of 1 share for every 4. 1 for every 4 at a price of what? At a price of 24. Our par value in the statement, par value yetu ni ngapi? 10 shillings. So we issued at a price that was more than the par value. The first thing, let us find the number of shares. In the ordinary shares in the trial balance. This is the ordinary shares, 10 shillings per value. Yeah, so the number of shares, they were 100, divided by what? 10 shillings, which will give you 10,000 shares. We find the number of rights. So 10,000, we give them what? One for every 4, which will give you 25 rights, 2,500 rights. So the double or the journal entry, that money will go to the bank. Bank 25 at a price of what? 24 shillings. One right is valued at 24, so they'll pay 24. The money will go to bank. How much will be that? 60,000. So 60,000, you shall receive it in bank. We credit ordinary. Ordinary shares 25 by what? Remember, ordinary is maintained at par value. Yeah, par value, which will give you 25,000. And the extra amount will go to share premium. So 25 by what? Our premium will be what? How much will go to the premium? 24 minus 10, which will be 14 shillings. So the extra amount above the par value. And you multiply 35. That way. So here, ordinary will increase by 25, share premium by 35, and that is a total of 60,000. We get the balance carried down. So balance carried down. This will be 125. This will be 75. This one, add that. This is 14. Add the retained and the total. The retained is 50? 5,800. Okay. The next. So you can either add EV or you add downwards. 264. 800. That way. So we prepare the last. Yes. What about the? Okay. When we talk about a rights issue, it is defined as issuing shares to the existing shareholders at a price below the market value. Yeah, on pro rata basis. So the market value was 50. So it was 40. So we are issuing below at a discount in order to encourage the existing to buy. The main reason, we don't want to dilute the ownership of the company. That's why we are reducing the price. So others will buy at 40, but because they are the existing members, they'll buy at 24. Yeah, that one you will do in FM. In FM, you'll do it under the X-Right. You'll find the X-Right prices under the FM. Yeah. Okay, so we go to the next one, Apple Limited. Apple Limited statement of financial position as at that 1st March 2017. So it starts with non-current assets, and the first one is PPE. I think PPE majority got that. Let me just do it here as working number 5 for PPE. Our PPE will comprise land at 24 and building at 70 minus what? 5, which will be 65, and plant was 189 with an accumulated of 49 plus for the year. This one that we calculated here, 28, which gave you 112, and total was 201,000. Here, PP was 201. That one majority got that. Was there any other thing apart from the PPE? I think it was the only one. We go to current assets. Inventory was valued at 87,400. Receivable? Yeah, 84,400. And now we have bank. Remember bank, we had an overdraft, eh? An overdraft of what? 13? It was 13,600. And now we have received money from the rights issue, equivalent to what? 60,000. So we shall take 60,000 minus the overdraft, 13,600. We report the net. That is 46,400. So total, get our total assets. $218,200. So when you add the two, it will be $419,200. So you go to equity and liability. Equity and liability. We just paste our statement of changes in equity. So starting with ordinary shares, we had 125,000, followed by share premium of 75, followed by retained earnings or retained profit of 5,800. We had the revaluation of 14, valuation reserve of 14, and that was 264,800. We go to non-current liability. Now we had what? The deferred tax, the current forward, which was 18,800. And I think it was the only one. We go to current liability, starting with payable. Our trade payables, we had what? Yeah, 7,200. And we had what? The accruals. Starting with the directors. Directors remuneration 11,000. This is 7,200. And we had current tax or income tax. We just call it the current tax. Our current tax was 54,400. I think that was all total. Yes? One what? So remember the current tax in the trial balance, already we have used it here as over provision. One? On that 5,600. So when you add 419,200. That's how that question was supposed to be